Welcome to Standard Chartered Money Insights, a podcast series by Standard Chartered Bank that brings you market views and insights on the go.
Hello everyone, my name is Manpreet and welcome to Cut to the Chase. Now today is the International Day of the Clouded Leopard. Day celebrated to raise awareness of a species called the clouded leopard, a species that's usually found in the forests of the Himalayan foothills and parts of Southeast Asia and southern China. Now I point this out as my own awareness of efforts to preserve endangered species was recently raised by reports that efforts were underway to repopulate cheetahs in India by importing 16 of them from southern Africa and repopulating them in the wild in a forest reserve in central India. Now, while the move comes with its own controversies, it shows just how exciting some conservation efforts are turning out to be and worth following closely. Now, speaking of endangered species, there are some fears that energy consumers could slowly and gradually join the group. OPEC Plus met as scheduled yesterday and surprised with a small, albeit nominal rise in output of about 100,000 barrels per day in an attempt to balance demands for greater output with what appears to be relatively limited spare capacity within the group. Nevertheless, oil prices took a fall yesterday as the meeting coincided with US data that shows crude oil inventories and gasoline stocks both unexpectedly rose amid a slowdown in demand. Now, while some reports argue the release from the US Strategic Petroleum Reserve was partly responsible, the data clearly helped strike a dovish note for oil prices. Media reports also said US and Iranian officials were once again traveling to Vienna to revive talks, again raising the possibility that Iranian oil supply could re-enter the market at some point. Now, overall, while this data was undoubtedly dovish for oil prices, we'd re-emphasize our own view that the current softness in prices does come amid a still tight demand-supply balance in oil markets, and thus one that could tilt towards renewed price pressures should global demand pick up, especially amid a Chinese economic recovery. This, of course, keeps us constructive on oil prices and energy sector equities. Now, looking ahead, the key event for today is the Bank of England policy meeting. The BOE faced a particularly tricky balancing act as it seeks to rein in inflation amid a weak economic growth environment. Now, markets are pricing in a fairly high probability of a 50 basis point rate hike, but a lot of focus is also likely to be on its quarterly outlook, with worries that the central bank could further revise up its inflation forecast beyond the 11% it currently expects as a peak. Now, finally, the BOE is also scheduled to outline how it plans to reduce the size of its balance sheet by selling down gilts or government bonds, with the central bank previously promising a mechanism to halt sales should markets face volatility. For the pound sterling, we do retain a range-bound view over a 1 to 3 month horizon. The GBP USD pair has rebounded above 120 amid what has been a broad pullback in the US dollar, but this move may be at risk as short-term US bond yields move higher amid hawkish Fed policy comments over the last few days. Now, higher Bank of England rates on their own should be a positive for sterling, but any rise in rate expectations risks being capped by a similar rise in inflation forecasts, which caps, of course, real or net of inflation bond yields. On balance, this could leave the GBP in a range between about 120 to 123.5. Finally, before we close, tomorrow is the scheduled release of the key US employment report. An ideal outcome for markets, of course, is a release not too far from consensus. As we discussed at the start of the week, the main risk will be a report that is too hot, which might raise Fed rate expectations, or too cold, raising fears of recession. In our view, this remains the key lens through which to view the final release. So overall, a range-bound sterling and long-term exposure to energy sector equities are two thoughts I'll leave you with today. But we'll take a pause there. As always, if you enjoyed this podcast, please don't forget to rate and like it. Thanks for listening and wish you a happy trading day ahead.
Thank you for listening to Standard Chartered Money Insights, a podcast series by Standard Chartered Bank. For more details on the latest market insights, subscribe to Standard Chartered Money Insights.